author, columnist, managing editor of LibertyNation.com, podcast host and conservative policy advocate.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
The big box media is in financial freefall. Job market figures continue to be twisted to political advantage. A bevy of new laws from the woke West Coast, and Dr. Jordan Peterson faces the wrath of progressive opinion once more. What could possibly go wrong? Welcome back to Liberty Nation Radio here on the Radio America Network. I'm your host, Mark Angelides. On today's show, we'll discuss all the aforementioned topics and a whole lot more. I'd like to say a quick thank you to our listeners out on KACT on 1360 AM out of Andrews, Texas. Thanks for being part of the team. Remember, this show is proudly sponsored by LibertyNation.com, where you can access podcasts, breaking news, analysis, and a range of biting and brilliant shows to whet your appetite for freedom and your fondness for the great American Constitution. Winter has come for the big box media in the form of tanking stocks and market fears. With billions of dollars fleeing the industry, what machinations lurk behind the Fourth Estate bonfire of the vanities? Well, we're joined by Liberty Nation's economics editor, Andrew Moran, and host of the excellent Swamponomics to figure out if wokeness killed the media star or whether something else is at play. Welcome back to the show, Andrew, and a Happy New Year to you.
Thank you for having me. Happy New Year. Happy Festivus to all the Seinfeld fans.
Oh, happy Festivus to all Seinfeld fans. Absolutely. It's Festivus for the rest of us. Now, give us the details, Andrew. How much money has evaporated and from which company specifically?
Well, the overall market lost about, $2 trillion, $3 trillion over last year. But a lot of these companies, these big box media companies, Comcast, Netflix, New York Times, they all lost billions of dollars last year. You see the stock tickers. I made a chart for Liberty Nation highlighting, 60% here, 30% here, 40% here. So it was really remarkable to see how much was lost over the last year based on considering previous years. You look at Netflix as an example. Netflix was a Wall Street darling up until 2022. And just last year, tanks 60, 70%, which is something I expected based on the fact of a rising rate environment would kill a company like Netflix.
Okay, so clearly the media industry, it's been trending upwards for many years. If you consider it over a longer period of time, compared to 20 years ago, compared to 10 years ago, the industry has exploded exponentially. But is this particular drop that it's now facing, is this reflected in other markets, or is it just an outlier, do you think, specific to this industry genre?
Overall, unless you invested in commodities or the U.S. dollar, you lost a lot of money in the stock market over the last year. But there are different factors influence why the media and tech sector lost. Of course, the big thing was the Federal Reserve raising interest rates. But when it comes to a company like New York Times, the slowdown in ad spending has been a real killer for a lot of these companies. They make a lot of their money based on companies advertising their products on the website. But you see a lot of the reports showing how there have been 6 consecutive declines in ad spending since the spring, and then a lot of the forecasts for the upcoming year in 2023, a slowdown in ad spending, recession fears is another key factor. So a whole variety of why you're seeing these companies tank and why they're laying off thousands of workers.
So media industries, are they particularly susceptible to advertising revenue drops?
Yes.
Advertised spending drops? Because with something like Netflix, for example, it's not really that focused on advertising. They get the majority of their cash from subscription payments, right?
Yeah, but with Netflix, they're launching an ad-supported subscription model in the coming year. They're following a lot of the other companies who have adopted the ad-supported model. You saw recently NBC Universal CEO, he was talking about this in a third quarter conference call, and he said that at the significant reduction in ad spending has decimated the company's overall revenues, which is why not only did the revenues fall short of their estimates in the third quarter, the company slashed its estimates for the fourth quarter. So that's going to play a big part in the coming year. But with Netflix, as I wrote it, in 2019 before the pandemic, the biggest thing that would impact Netflix is a higher rate environment. Because you look at their balance sheet, they have about $18 billion in debt with only a cash flow about $6 billion. That's a huge gap.
Surely the Meghan Markle and Prince Harry extravaganza has fixed that mere drop in the ocean.
Well, you need a multi-part series of feeling sorry for Prince Harry, and then he's going to complain
Yeah.
and moan and whine and then say, oh, my life is so terrible because I lived in such opulence all my life. And then Meghan Markle's to say, oh, my life is so terrible because I'm this millionaire who someone said a bad word in Buckingham Palace one time.
So, Andrew, I think part of what I wanted to get into here was wondering how much the companies that control, so the mega structures behind the companies, how much their individual decisions are affecting their market impact and thus their revenue streams. So to me, and obviously I'm not an economist and I don't play one on TV, but it seems to me that companies that are pushing more for the woke agendaism, it's not so much that it's a case of go woke, go broke. It's a case that there's so many new companies entering the field that have this same far left progressive ideology that it's being filtered. What was initially a good market share for people who like the progressive output stuff, there's now more options for them to choose from, and so that their piece of the pie is getting smaller. Now that's just my I don't know what you'd call it, like armchair analysis. What do you make of that?
Well, what's interesting to talk about options. One of the biggest things that I've read from market analysts for Morningstar and Bloomberg is that a lot of them anticipated greater activity levels in the merger and acquisitions realm in the big box media sectors. You can have a lot of other corporations absorb, a streaming firm, or you can have a lot of these streaming firms adopt, purchase other content from other companies. You saw this. I mean, I don't want to go too deep into film history, but you saw this a lot.
Feel free.
In the 1950s, 1960s, where a lot of these smaller, surprisingly, distributors or production companies, they produced films that critically were great, but they lost a lot of money in the box office, and they actually went bankrupt as a result, and they had to be absorbed by these larger box office studios, and therefore they bought all the content. But overall, when it comes to the woke content stuff, I mean, I've been asked this too. I mean, Jeff Charles asked me that question: how much does wokeness affect the bottom line of these companies? It's hard to really gauge. I mean, you could make the correlation. You start seeing, Netflix. Netflix had that Korean movie about this guy who was pregnant, and then interestingly enough, when that movie became was widespread, that's when you saw the bottom line of these companies falling. So I think woke. I mean, people are sick and tired of being force fed this nonsense. But at the same time, I mean, people are staying home. I mean, here's the thing. There's two things. So in the movie theater business has yet to recover fully from the pre-pandemic levels. But when people do go to the movie theater, they're choosing things like Top Gun or the latest superhero movie. But for a lot of the smaller independent or even mid-budget films, they're going to these streaming services. They're going to Amazon, they're going to Netflix, going to whoever offers these products. So it's hard to really choose. It's hard to really to fathom, does the woke content impact Netflix if people are staying home to watch Netflix to capture the latest, was it the Knives Out, that latest film, or Avatar, those. So it's hard to gauge how much it's impacting the bottom line for these businesses.
Yeah, I think part of it certainly is that there's a certain amount of consumers who are turned off by the pervading sense of wokeness. But according to these media companies themselves, that's only extremists that aren't on board with this kind of stuff.
Well, okay, so I agree.
So surely what they're saying is it's a tiny element of the market that are being turned off. And I don't think that's the case.
Yeah, well, actually, Bob Iger, he would probably agree with you. He when he returned as CEO of Disney, he held that powwow with staffers at the company. He said, you know what, we're going to be less vocal. We're going to be more considerate. We're not going to be focused so much. And I'm paraphrasing, of course, but we're not going to be focused on woke content and and transgenders having, I don't know, whatever, wearing dog faces or something, whatever the crazy nonsense the left is coming out. So,
which has been happening at Disney for decades, of course. The wearing of dog faces.
Exactly. You look at all the progressive, messaging that goes onto these latest Star Wars movies. But I think in the short term, Disney's probably going to try to tone down that type of content, produce more things like, I think from what Jeff tells me, things like Mandalorian doesn't fall for that nonsense, or this latest Mandalorian prequel doesn't fall for this nonsense.
You're saying words from your mouth that mean nothing to me, but I assume that these are Disney Star Wars products you're talking about. I'm
going based on what Jeff tells me, because Jeff Charles, our host of Right On, he's into these things. He knows more than I do about that kind of content. So I'm quoting from he says.
Fair enough, Andrew. Fair enough. We won't take away your cinephile bona fides. Andrew Moran, we'll be right back with Andrew after this short break, busting the 2023 labor market myths. Don't go anywhere. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Since Joe Biden took office, the economy, despite the protestations of the legacy media, has been in what seems a terminal decline, except for one metric, the jobs market. And yet this oft-touted rubric may not be as clear-cut as the administration would have us believe. We're back with economics editor Andrew Moran to sort some facts from some fiction. Now tell me, Andrew, we've heard so much about how epic the job numbers are under Joe Biden, but it seems to me that there's a number of, let's call them, inconsistencies. What's your take?
Well, first, my apologies to our listeners who have to deal with me for another 10 minutes. But when it comes to the labor market, yeah, I mean, this has been really fascinating to dive deeper into the numbers to show how the headline figures are very different from what's beneath the surface. And I've been trying to find why there's such discrepancies between what's being reported on and, what you see elsewhere in the economy. So the biggest thing right now is the divergence between the establishment and the household survey. Now, the establishment survey is based on, serving businesses, and the household is based on serving households, of course. But the big gap between them is that establishment surveys, they account for multiple jobs. So if one person has 3 jobs, that counts 3 jobs. But the household, if you're interviewing somebody who has 3 jobs, that only counts as 1 payroll. So as a result of this, as of the latest numbers, of course, in December is the November jobs report. The divergence is about 2.6 million, which is massive. And then what's even further interesting is that the Federal Reserve Bank of Philadelphia, it published a report talking about how between March and June or July, the Bureau of Labor Statistics overcounted by 1.1 million jobs. So that's about, if you count as a whole year, that counts at least 10% of the 10 million jobs that's been created. So, and that's just from March to July. I mean, you think of what happens in January, February, and then after that from the rest of the year.
Seasonal layoffs as well, January, February. Let's just reiterate those numbers again, just to make sure we've got this completely clear. So you have an industry number that says that there are 2.65 million more people employed than the household survey says, right?
Yes, correct.
Okay, so when we hear the numbers from the White House, are they using the industry numbers or the household numbers?
They're using the industry number. They use the headline figure, which, of course, I mean, you can't blame the White House. Every administration,
of course, yeah.
Everyone points to the headline figure. The mainstream media does it too. The business investors, everyone does it.
But the reality is then, so when we think about it in real terms, casting aside the jargon, when we think about the number of people in jobs, that has been overcounted for the entire year by more than 2 million people. Is that correct?
Yes, that's correct. If you look at the Philadelphia Fed Bank report, it said the actual net jobs was about 10,500. So, I mean, that's a considerable gap from what the BLS has been reporting. And
that's the 1 million figure, yeah? So 10,000 versus 1 million, right?
And but then you look at the other figures too. You look at the number of people who are working 2 or more jobs. That number has been gradually increasing since last year, and it stands today at 7.7 million. And then you look at all the other data points too. You look at the ADP employment report. It showed, for example, last month that that the manufacturing sector lost 100,000 jobs, but the BLS reported that there was a 12,000 job gain in that sector. These things don't add up. And they look at the private sector numbers. You look at the Challenger job cuts. That was 77,000 in November. You look at the PMIs, which keep showing slower employment growth or loss in jobs. So there's something doesn't add up between what the BLS says and everything else.
So I guess the question everybody wants to know is pretty much, let's say everybody across the media, left, right, center, has acknowledged that the economy is struggling, obviously with inflation figures, with a recession. I'm doing a quotation marks there with my fingers, and we will get to the recession briefly in a second, Andrew. But everybody's pretty much acknowledged that the economy's not in a great position. And yet you haven't had many people at all within the media of any side talking about this discrepancy in the job numbers. Now, you'd think, at least for the anti-Biden media, this would be a number that they would be singing from the rooftops.
more conservative media, they are reporting on this discrepancy. So even Senator Rick Scott of Florida, he came out with a press release asking the BLS why is there such a canyon size between the BLS the numbers that BLS reported and what's really happening. So I think gradually it's going on. The conservative websites are reporting on it. It's just it's labor data. Is labor data exciting? Is that going to attract headlines?
It is if it's inflated to such a degree that Joe Biden can coast through the midterms on the back of a stunning jobs economy. It's certainly an important number, wouldn't you say?
But that's why I'm not the managing editor of a website like yourself. See what headlines grab the most attention.
Okay, so Andrew, we've discussed the measurement metrics here being chopped and changed to benefit the party in power, whatever party that is, because as you say, all parties do it. Now, what I'd like to do is get a brief analysis on how this compares to the recession redefinition and inflation rubrics. So, I mean, I guess the first question is, inflation, is it happening? Is it going to happen for 2023?
Well, I mean, inflation is happening. I mean, just because, the inflation rate goes from 9.1% to 7.1% doesn't mean inflation has been eradicated. Inflation is still going up, but at a slower pace, which is what nobody points out when the administration says, oh, inflation is going down, but it's still, price is still rising. And that's frustrating too. So inflation, I mean, it's going to go down to, let's say, 5% by the end of the year or 4%, but that's still higher. It's double than the Fed's 2% target rate.
And will this lead to a recession, do you think, for 2023? Will anybody ever admit that a technical recession exists?
Well, I think it was Fitch Ratings. I think it was Fitch Ratings who said the other day that there was a technical recession in the first half of 2022. Yes, so there was a technical recession last year. This year, I think actually there will be a recession, and some people are going to declare it as a recession. They can't hide from the fact. All the metrics suggest that it's heading that way, and I don't know how you can redefine it or spin it. I'm pretty sure the administration would be clever somehow turning it around. But
you could say that the jobs economy is doing really well, and there are lots of new jobs, right? Oh, no, wait.
But I think what's important to point out one more thing before we go is the fact that the recession, it's going to happen. But what happens after the recession, which is what I'm really concerned about. My prognostication for the last few months has been that it's going to be returned to the Obama economy, where you have stagnating economic growth, elevated unemployment, and you still have you add on top of that elevated inflation compared to what it was pre-pandemic. So I think that's the trifecta that's going to happen, and that's what concerns me more than this blatant 2 quarters of economic growth.
Do you think that, I mean, I may be wrong on this, but isn't the Obama economy, isn't that akin to the Japanese lost decade? Isn't that pretty much the same thing?
Yeah. So if you read my article that I wrote recently, I talked about how the U.S. economy would be replicable to what happened with the lost decade of the 1990s in Japan, which many still say is still going on to this day. Stagnating growth, a lot of zombie companies, too much debt, higher interest rates. Yeah, I mean it's a blend of it's a concoction of many negative factors that will not lead to terrific economic growth in the United States.
Okay, final question. Very, very quick answer here, Andrew. What does all this economic data mean for the average American?
Well, you're paying more, of course. You have a threat of losing your job. There's the old phrase, if my neighbor loses his job, it's recession. If I lose my job, it's depression. So, I mean, and then higher interest rates means higher debt payments, higher cost of living. Paying for everything's going to cost more. Trying to find a job may be harder. So, yeah, the average person is not going to have a great time in the coming years.
A rosy outlook from economics editor, Mr. Andrew Moran. Thank you for kicking us off into this new year with a wonderful, cheery prognostication. Andrew, thanks ever so much for being here.
Thank you for having me.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
With the new year comes a new bevy of laws applicable across the United States and in individual states. Now, these laws, be they extreme wokery or standard fare for the masses, we're here to find out with Scott DeCosenza, Liberty Nation's legal affairs editor, host of the excellent Uprising podcast, and general hero to all those who believe in liberty. Welcome back to the show, Scott.
Well, with an intro like that, we can't go wrong, Mark. Happy New Year.
How I get people in, Scott.
It's good to be back with you.
So, Scott, you wrote a great article on the pages of libertynation.com discussing some of the new laws that are coming in, that came in on January 1st, 2023, as the clock struck the new year. And to me, Scott, it seems that a lot of these are engaged in wokery. would you like to give us a brief overview of what you think are the more liberty-sucking laws?
Well, the most widespread of those is the minimum wage increases. I think it's 26 states plus the District of Columbia have increases in minimum wage, which, of course, for those of us who understand the free market, what that means is that's just they've now raised the hurdle for people whose labor is not worth that minimum, for them to say, don't bother trying to join the labor markets. Just go kick rocks. We don't want you in there. Of course, that's under the guise of them being a champion for the little people. But of course, really, if you think of who it hurts the most, is it hurts the people who cannot, whose labor isn't worth that much. And of course, the best thing for those people, in order to actually get their labor rate up, would be to get some experience. We think of the low skilled, perhaps, if they can establish that they can show up on time, for instance, and take direction well and perform their job duties. That's how people get above the minimum wage, not by just decree. And so the other sort of component about that is just quite tragic is that there are some significant number of businesses, and we won't know until maybe we look back next year this time to see what businesses that had to shut down because their margins were so tight that they couldn't afford to pay for this increase in labor costs artificially imposed on them by the state.
So for me, Scott, that's actually the biggest deal because all countries are built and work based on small business owners. They're the people in the communities who have, for example, in America, in the East, you might call it the bodegas, for example. So you have somebody who owns a bodega and maybe they they need to employ somebody.
Or bodegas if I was Jill Biden.
Oh, yeah, there you go. Well, of course, as varied and diverse as breakfast tacos. But so you've got these people and they're struggling, right? Because
by the way,
small
that's just a
businesses
New
do
York City
struggle.
thing. I hate to interrupt your flow.
I know. This is why I said the East. This is why I said the East.
Yeah, but it's just New York. In Philly, and Boston, and DC, nobody says bodega. Anyway,
okay. So what you have is these small businesses, and maybe they want to take somebody on because they're getting old. Maybe they want to increase their business. But what about the people who are already working there as employees? So let's say, for example, just as an arbitrary figure, because obviously this is across 26 states, as you pointed out, and DC. Let's say somebody was on $8 an hour, and now they have to be paid $16 an hour, and that's over an 8-hour day. That's a significant chunk of change for an employer. If they have 1 or 2 employees, it's probably not a hugely profitable business. Why is there no kind of grandfathering of this?
Well, presumably then people would just quit and go into a different job or quit and get rehired the next day. I think that the right way to think about that is Mark, it's the businesses that actually are doing, if you're to look at the world from the progressive mindset, who's a better employer? An employer that has no minimum wage jobs or vast numbers of minimum wage jobs? It's funny because they might say that the people with vast numbers of minimum wage jobs are the most exploitive. But for those of us who look at the free market, we can see and say, well, who's giving the least of us, the least skilled, the most opportunity is the people that actually employ people at the minimum wage. And of course, the more that they have, right, on their books, on their employment rolls, the more minimum wage employees they have, the harder they're going to get hammered by an imposition of an above market rate imposed on them by the state.
Well, we earlier in the show, we had Andrew Moran on talking about the inflated job numbers under Joe Biden from the Bureau of Labor Statistics with the industry job figures compared to the household job figures. And there's a discrepancy of over 2 million jobs there based on people who have more than one job. So you're talking people who, for example, they do an Uber, but they also do deliveries at the same, like a rideshare thing at the same time. And these people have numerous jobs to make their income, to make their lifestyle work. But the people who don't have these like rideshare jobs or these app-based jobs, and maybe they have a job in the morning, they go and do some cleaning here, and then they have a job in a restaurant on the evening, in either side of looking after their children, they're probably going to lose at least one of those jobs, right?
Well, it stands to reason that it's not going to get better for them, Mark. It's going to get worse for them. You think of like supermarkets and restaurants, and these are the kind of uh, companies that require lots of people. And because they are willing to accept people without a lot of developed skills, they have the most of these things. And I just want to put it out there that what's going to accelerate the use of the increased use of self-checkout kiosks and robotic, burger flippers at the fast food restaurants. This is the kind of thing that just accelerates technology in order to eliminate human labor from the workforce to the extent possible. We haven't started talking about it yet, but California is a host of, probably the worst of all the states in terms of the sheer number of new laws and how they get their fingers into the details of how businesses conduct themselves. But you read the new laws and you think, why would anybody want to open a business there, right? I mean, even more, it's like a doubling down of it.
Well, we've seen a number of businesses as well as people leave California over the last couple of years. Jeff Charles had an article on this on Liberty Nation recently, and the masses of people that are going, despite having a positive birth to death ratio, they're still losing an inordinate amount of people.
And who do you think is leaving and who's staying? In other words, if you're an entrepreneur, right, and you want to work 100 hours a week in order to make your lot in life better and better for your progeny, would you be more inclined to stay in California to do that or go just about anywhere else?
Anywhere else. As we know, Texas is becoming a burgeoning tech center for the uber wealthy, the ones who want to make the businesses work. Now let's continue with California, Scott. To me, I was reading through some of the laws. Now I don't have an in-depth understanding of what these laws would mean in practice, but on a surface level, it seems that a vast majority of them were directed specifically at people with what we now term favorable immutable characteristics.
Well, sure. So there's, so there's the pink tax elimination effort, which is for people who don't know, the pink tax is this allegation that if there are two products that are similarly situated, and one of them appeals to women or designed to appeal to women, it may often cost more than the one that's designed to appeal either neutrally or to men. And that's why it's called the pink tax. So, for instance, if you sell razors for men that are, designed for them to shave their faces versus a woman's razor designed for leg shaving, for instance, but it's pink and pretty, and the man's one is just, the cheap gray plastic you now can't charge more for that. Even if, by the way, the pink plastic costs more than the gray plastic, right? So it can cost more in order to appeal to, to the female or female identifying consumer. But no matter, that's now going to be punishable by heavy fines in California. So once again, it's like, if you want to sell something in California, you're opening yourself up to this increased level of not just regulation, but significant fineage.
Yeah, I mean, the alternative is for the consumer to, if they believe the products are essentially the same, is for the more feminine consumer
How dare you,
to buy.
Suggest that the consumer can vote with their purchase in dollars and that it's not up to the California legislature to make things right. And damn those pink taxers.
I know. I'm really holding back the cause of communism in California here. I know that. And for that, I'm deeply sorry. I will be having my struggle session later on. And what other laws stood out to you at the California unveiling on January 1st?
Well, two, I would say. One of them is a sort of trans person safe harboring, which, while that may sound good in at the headline level, what it means is that if you're a parent in, let's say, Virginia, for instance, and you have a child who is in the midst of a trans identity crisis, they can go to California, and California will no longer sort of recognize the out-of-state parents' legal rights in the matter. So if a Virginia court says, yeah, I see your face.
Can you spell trafficking, Scott?
It's, and then the other one is this new regulation for doctors, whereby conservative doctors, Mark, who wish to be able to speak freely to their patients about risks and rewards for instance, mRNA vaccines, are now thinking that they're going to put their own medical licenses at risk because the governance, the establishment in California who controls the laws doesn't want any backtalk on, for instance, vaccines, right? And so what they've done is they said that misinformation or disinformation will now be punishable under law. And instead of having medical boards just do that without the government's intervention, the legislature is coming in and saying, this is what is permissible for you to discuss with your patients, and that's what the kind of independent non-woke doctors think of the new regulation. So it's not going to accrue to the benefit of physician-patient communication in any regard.
Presumably, this discussion in the Golden State on mRNA gene therapies, I suppose they are, rather than vaccines, I guess. Surely that's just one aspect of it, though, right? Once the government starts getting involved in issues that you as a doctor can discuss in confidentiality with your patient, then surely it's not just going to be on one thing. Once that genie's been let out of the bottle, surely it will. As
long as you represent to your patients whatever progressive Twitter deems acceptable information, you're going to be okay. That's a good guideline, I think, for physicians going forward on the West Coast.
Who needs medical school when you have the California government? Okay, Scott DeCosenza, we'll be right back with Scott after this short break, discussing Jordan Peterson and the new Canadian struggle session. Don't go anywhere. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Canadian provocateur and Professor Jordan B. Peterson is under fire. What for? Was he delving into malpractice? Was he mistreating patients? Or was he upsetting the governing body of his profession? We're joined again by Scott DeCosenza, a lawyer, not of Canadian law, I might point out, to speak to us about this particular threat to Dr. Peterson's profession and also about the growing trends in America. Scott, tell me what you know.
So some people on the internet complained about Jordan Peterson to I think it was the Ontario College of Psychology. And they have said to Dr. Peterson that he must attend mandatory re-education classes for social media. He says that it was about him criticizing Pierre Trudeau, Canada's prime minister.
Justin Trudeau.
Twitter.
Justin Trudeau.
His father's Pierre Trudeau? Is that right?
Yeah,
Did I get that?
correct.
Okay. Sorry about that. I'm not that old. I should have. And also for retweeting some other
Pierre Poilievre. I don't know how to pronounce it, but also a prominent Canadian politician. Yes.
And there's no allegation that Dr. Peterson, from any of his patients or anybody close to his patients, has complained. Just some rando internet people that this made them, and as he wrote it, it wasn't even that it made those people feel bad or something else. It was just that they recognized that those social media posts could make others put others in a bad spot, and so he's been summoned to undergo this re-education, and he has said he will not do so, and is putting it to them, I guess, to make the next move, but that he will not succumb to that pressure and give up his free speech, which of course is sad because, as we know, in Canada and I think every other country except for the United States,
every other country
thing is as a legal right to free speech.
It's something that so few people realize how lucky Americans are to have.
It ain't luck.
Oh no, of course it isn't luck. Absolutely correct. How fortunate that Americans are to have it enshrined as a
blessings
right.
Of liberty. Absolutely right. Yes, it's no joke.
It seems the most illiberal taking of liberties that Dr. Peterson would have to undergo. It's quite simply, it's a struggle session, right? For him to get away with this, and this is presumably why he's not choosing not to engage with it is he would have to go along and admit fault for retweeting a Canadian politician or for criticizing the policies of the
Which,
incumbent
of course, is how
Prime
Dr.
Minister.
Peterson got famous in the first place.
It is indeed.
That he refused to kind of be compelled to speak, and that's what he said that a new regulation required him to use someone's preferred pronouns, and while he said if someone asked him, politely to use pronouns that he didn't understand or agree with, he would most likely just out of politeness go ahead and do so and honor their request, but that he refused to be compelled to, because of course when you control what somebody can say, then you can control what they think, which is why it's so important that we fight with every ounce of our being to keep that free speech right in America.
We have seen this almost compelled speech issue come to the Supreme Court of the United States, though, haven't we? With and I hate to use this particular, let's call it the gay bakery issue, even though the baker was obviously himself not gay. But wasn't this a case of individuals were suing to compel him to, and it was a speech case, even though it was obviously him not saying something, the baker, it was him having to produce something that is I guess that would come under as an element of speech, wouldn't it?
We're waiting, Mark, now for the Supreme Court to resolve a case of a website designer, and that's sort of the redux of or redo of the Masterpiece Cake Shop decision, which we never got a really clear answer on from the Supreme Court due to some basically they took a hard left, and that's not an ideological statement. I just mean exit stage, whatever, by not ruling on those contentious issues in the Masterpiece Cake Shop case, because Colorado authorities were so hostile to religion generally that they were able to rule without addressing that fundamental question. But we're expecting to see them actually rule on it in the form of whether or not a person can advertise for wedding website design services, and also indicate that they don't wish to design those services for people who are engaged in same-sex marriage because of their sincerely held religious beliefs. Now we're going to have to see, but that's the pitting of it, whether it's compelled speech or not. And compelled speech has always been held to violate the First Amendment anytime it's been examined by the Supreme Court. So I don't think that the Supreme Court will say it's compelled speech and it's okay. What they may say is it's not compelled speech, it's some sort of other thing, and therefore it is okay. But we're going to have to wait and see a bit.
So do you expect no bright line ruling on this?
I have such a emotional and a professional interest in seeing a bright line rule. It's hard. It's hard for me to be objective on that point. And I suspect that, the composition of the court today will likely is more likely to result in a bright line rule that protects the speaker than not.
Scott DiCosenza, we will continue following this case and many others as the Supreme Court session rolls on. Scott, thanks ever so much for being here.
Thanks, Mark.
And that's almost all we have time for in this week's edition of Liberty Nation Radio here on the Radio America Network. I'd like to thank our guests, Andrew Moran and Scott DiCosenza, and extend my deep appreciation to you, the listeners, for taking the time to join us here. My parting shot for this week comes courtesy of noted author Gore Vidal. He said, quote, "Of course, it is possible for any citizen with time to spare and a canny eye to work out what is actually going on. But for the many, there's not time. And the network news is the only news, even though it may not be news at all, but only a series of flashing fictions." End quote. I think we all understand this intuitively. We see fictions played out before us with dishonest voices pleading with us to disbelieve our own lying eyes. And if we do summon the strength and the critical thinking to refuse, to not accept the narratives they present, we're deemed enemies. Perhaps the big box media is not looking for mere consumers, but converts to a cause with neither form, feature, nor fact. Thanks for listening. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides. Entertaining, informative, and just plain fun. Watch Liberty Nation's The Conservative 5. produced by conservatives for conservatives. C5's The Left Free Zone, hosted by Liberty Nation's
Hi, I'm
Lisa
Lisa
K.
K.
Donner,
Donner,
joined by a raucous, irreverent panel of authors, deconstructing leftist narratives, debating the hot topics, and remembering to laugh. Join the official conservative safe
You only
space.
did that to piss Jeff off.
Liberty Nation's The Conservative Five.